Hello guys, this is FX Mesh smashing it. What is going on, guys? Yeah, welcome back to my channel, my weekly Forex and Indices and forecast for the week running. And I'm welcoming back, excited to share with you my perception, my experience, and what I've seen in the market over across different instruments. And we'll be starting with what happened in the week. I think what happened in the week was that we saw a significant tanking, that is movement of the market to the bearish, because the USD gained strength, significant strength across all the US pairs, and that led to the tanking. So I wasn't too comfortable with that. So what I did was to look for other opportunities elsewhere, and I looked for opportunities on the Euro JPY and CAD CHF. So let's go over to the chart to see how the week fed, and also then later we'll continue with a few US pairs that we'll be looking at for in the coming week, 20th to 24th June. So let's go over to the chart now as we uh, see our analysis. Alright guys, let's go. Hello guys, this is FX Mesh smashing it. What is going on, guys? I took a trade card CHF, Swiss francs, and I almost got into take profit, but the market stopped me out. Yes, it stopped me out. I'll explain what happened. This was a very beautiful trade initially, but somehow I think the trade was a little bit tricky along the line. I took this market came, built up like this, fell, then it built up to a level, past this level, went up here and built this bearish push to the downside, but creating lower lows and lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and it came up here. So what I did was that I drew this. Let me emphasize on this first. Oh no, sorry. I drew this line here. I made it more thicker. I want to make it more thicker so you can see what I mean. Yeah, so now this line, I drew it. My plan was that once the market breaks through this line and turn, it should turn and push to the downside. So I put my take profit here. I didn't want to be greedy. I put my TP1 here first. Then the market came round, and the reason why I took a sell was that it was around this 0.786, and I could see a weak rejection. So the market came down like this, came down. If you observe, my take profit was here, just a few pips to take profit, and it reversed back and went up, and it stopped me out. So overall, I'll say I still learn from this trade, because this loss is not really loss, is just a lesson. What I thought I would have done is that maybe I would have left the trade because of the erratic movement of the market. There's so many weak rejection here, so this week's stopped me out somehow. I'm still positive. I haven't lost that much. I will show you what it was. So I have we have yeah, that. So that's one of the trade I took. I'll try, and I'm trying to upload the So this is the trade I took, cat chef, and this is the losses taken. But I made other profit in Euro JPY, but I just jumped out because I saw Euro JPY misbehaving. It wasn't moving too well, so I decided to jump out. I took a buy on Euro JPY. Let's go back to the chart. Let's see Euro JPY. Yes, here. Yes. This Euro JPY, I took a buy from here. Sorry, I took a buy from here because I could see that the market has already, it gave me an inverse hammer here for the signal here. So this inverse hammer means that it's a signal that it's going to travel a long distance, at least into this high of the week and low of the week. So when the market was already around here when I entered, so it was giving me some good signs here, but after a while I decided to jump out because I felt that the market has created a double bottom. Hit here, came here, hit here, so definitely it will push to the downside. It came here again and hit the area of the low of the week, this low of the week, and pushed to the downside. So I got the trade wrong actually, but I opt out early enough. I don't want to, because I was expecting the market to push to the upside, but I was not too comfortable with the trade. I could see the market always reacting to the low of the week. It came here the first time, it rejected, came back again, tested it again, rejected, tested it for the third time, rejected, and pushed far to the downside. So I already jumped out when I was around just a little bit into profit for the and that's why you can see that my euro JPY is not much. Yeah, so just down $16. But one important thing is that I have very good risk management in this trading, so I'm not feeling too bad. I'm fine now. Regarding the Euro JPY, as it stands here now, you can see that the market is already creating a funny a funny reaction here, and this is what I expect. But for now, and you see that I've already marked this area as a very strong level, and I'm looking for a possible buy because then there's a weak rejection here, there's a weak here, there's a weak here, so I can easily just draw a line, two lines joining the wicks. See, so I might most likely take a buy here later, but I have to look at it properly to see if I can take a buy here and put maybe my take profit somewhere somewhere around here. So what I've observed is that the best way that trading works for me is when I am able to, I don't take too long trades. Like for example, between here and here, this is a good movement. I didn't take it. You can see these boxes are points where I expect the market to touch before it reverses or it bounces. Now I already created one here as well. Market didn't come here, it just shot to the upside. I can see the market reacting to key levels. Now let me just tell you that this particular analysis is called the multi-time frame analysis, where I identify the high of the week and the low of the week. Then I identify my key levels, my psychological levels. So identify the low of the week, high of the week. Then all these thinner lines are the psychological levels. psychological levels are rounded up levels that where buyers and sellers can buy from. So what happens is that the banks usually look at these psychological levels and take trades from the psychological levels. So if the low or high of the week intersects any trend line, that point could be a point of entry. Like for example, now you can see that the week started from 13th. This week started from 13th. Now the market started here, and what happened? The market started on the bullish strength, so push to the upside, bounce down here. I could have as well taken a buy here, but we're always looking for double tops and double bottoms and strong push or strong impulses. That's when we take a trade. When I mean strong impulses, like now look, you can see a strong impulse to the downside. You can see a retracement here. You can see a strong push to the downside. Now what I do is that before I take a trade on this multi time frame, I always make sure that at least two lines are meeting together and the market reacting to that point. Look at this. Look at this trend line. This trend line is meeting what this high of the week, and look at the market go to the point, and you can see weak rejection there. It means it's a time for a sell, but I didn't take the sell. The market pushed to the downside, reacted here, and pushed downwards, and you can see again that this if psychological level meet with trend lines, or the low or high of the week meet with trend lines, you can take. It's a good opportunity. Now let's look at this one. Now inverse hammer. Look at it. You can let me take this thing out first. It's not clear. Now you can see that the market has pushed to the downside. Look at this psychological level. This horizontal psychological level is meeting with this it meets here. Then when the market was here, this line has not been formed. It was when I got here, that's when I drew this line. So how do I take the trade? I take the trade when I see strong weak rejections. Yeah, strong weak rejection. Look at strong weak rejections here. You can see it, a very strong weak rejection. So I took a, so you can take, I drew a box here, but I didn't take the trade. It bounced, went to the upside. Look at it again. Strong weak rejections. Sell. You can take a sell. And that's strong weak rejection. But this time around it's a kind of a double top. Bounce here, hit here, bounce here, then up to the upside. Okay, you can see a double bottom formed already. That's a good sign. You can take your entry from here. Take your entry from here. Look at this point. Now this line is psychological level. Now anytime you see long wicks, it is a sign of a reversal, so or an entry rather. Look at it. Long wicks here. You can see long wicks here. Take a sell. Bam. Look at here again. So here hit. Now it's touching psychological levels. Long wicks. Push to the upside. Look at long wicks again. I draw a box there because that is it's a good entry to sell. But I didn't take much trades in this particular instance. Then long wicks down, push to the downside. Then this one again, long wick again. Now in this case, this one has already been formed, so I can just as well, for me to, yes, a very beautiful entry, because here has already formed, here has already formed before this one formed. These two places formed before here, so that's where I drew this line, and the market came down here. Now look at this point, this line and this line here, and this psychological level meeting at the same area, and that's where I drew this box here, and it's a good point to enter. I didn't enter because I was busy doing other things. This week has been very funny because I usually focus on USD pairs, but the USD has not been has been a little bit, the market has been selling, I've been tanking, so I decided to leave USD pairs and focus on other pairs. And I also identified this one as well. The market got here, reacted here twice. I marked this one, but I opted out from it. So yeah, then it came here. Then you can see this one was almost like a losing trade. It came up, played around here. The market has been playing around psychological this low of the week. It reacted here, it pushed it downside. Today is Thursday so far. Today's Thursday, New Zealand time, 8 a.m. in the morning. So the market is here right now, and what I'm seeing now is that let's take this one out first. Take this one out first. Take that out first. Now, what the simple trick to this particular trading is that once psychological levels, this psychological level, this psychological level, once it meets with a trend line in an area, and we have weak rejections there, then most likely we are ready to enter. No, so I'm going to be I'm most likely going to be entering from here, this area, and I'm going to taking what a buy, because I can identify a double bottom here, hit here, up, hit here, and a push to the upside, maybe to this point. This is the most key. Yeah, this is either here, here, or here, or here. So I'll try as much as possible to see how this market goes. I will enter here. I'm entering it live now, so you can see what I mean. So you can see how I'm doing it. I'll come back to it again, and I'm going to make a video to see how this market played out by the end of the week. This is FX Mesh smashing it. If you like what I'm about, please like, subscribe, and share. I'm going to take a buy for the Euro JPY, and I'll show you how it played out. Catch you in the next video. Yeah, I decided to opt out from the Euro JPY. Yeah, because there's a news coming up very soon, 11:50 New Zealand time, Thursday, at about this morning. And the reason why I decided to enter that trade in the first place is for me to go short and see what the market is doing. I've learned from experience that each time you are trading, it's always good to get what the market gives you. And I'm not going too long on this particular trade, so I'll be taking another trade when I see an opportunity. Back to the screen. In the previous video, this was where I was trying to explain that we'll take a buy from this area, and I took a few buys here. I hopped out, took another one again, but I hopped out because I didn't like the way the market was performing as a result of the fact that during this time it was around the Asian market, and I don't usually trade around the Asian market, so I decided to hop out of the trade and allow the market to, I picked some profit here, then I hopped out, then the market tanked down and pushed to the downside. I had some losses there, but this tanking here was as a result of the news that came out, which saw JPY positive. I think it was interest rate. I'm not too sure. Let me see if I should be so that's what happened. Then I left Euro JPY. I just left it all through this, and it gained strength and pushed to the upside. Now let's go over to some few pairs and wrap up this video. We're going to take a USD pairs and see what we think the market will be doing based on the way it has performed in the week. For now, in the week, this week started on the 13th. I remember I started on the 13th. You can see 13th of June. Let's see, 13th of June, Monday to Friday. Today is Sunday 19th, so 13th. So if you go here 13th, you can see around here, what did the market do? The market pushed to the downside. That's for the NZD USD. It put to the downside. So it started pushing to the downside, then it started gaining strength again to the upside again. And this is I marked the highs and the low of the week, and just up like that, and just like that, just like that. Now going forward, now here does not really matter. Why here, man? The only time here matters is when it's just what we just want to know the trend of how the market fared. Now, for us to even know how to even analyze going into the future, we'll rather go to the 4 hours time frame, and go to a bigger time frame to have a picture of the overall attitude of the market. And for NZD USD, I'm looking at well, this was the previous low and highs of the week. Okay, now if you look at this market properly, you see that the market is forming a very clear double bottom. Now let's go, let's see 1 day, and let's see if it's, oh yeah, that's good. Okay, it's good on 1 day. On the 1 day time frame, you can see that it's building a very beautiful double bottom on a bearish trend. So we have the bearish trend coming from the past weeks and maybe even months, even from 2021. We can see it from here, up, down. You see it, up, down, up, down, up, down, up, down, up, down, up, down, up, down. So we're expecting what? A bullish push to the upside before it probably push to the downside. So this is where we are actually focused on. So now, because we are here, let's go over to a 15 minutes time frame, and you can see that. So what we're expecting, having that in mind, going ahead, our directional bias would most likely look, it's gonna be, we're expecting the market to push to the upside. That is where our directional bias. Now the directional bias is very important because it helps us have an idea, or overall idea, as to where the market is going to be headed to. Now let's zoom closer and see what the market might probably do. Now in this area, now because I've drawn a lot of construction here, I won't want to delete it. I would have deleted it and show you how I came about all these lines, but let's leave it like this. As far as we have our directional bias, which we think is going to push to the upside. Now what we want to do is to draw a line, a trend line, 2 points. Once here and here touches, that is good. Now what we want to do now is to use our Fibonacci tools. We'll draw a Fib retracement from here to here, from this point, this high point to this low point, to see where the market is going to retrace. Now we know our overall trend is up this way, but there are trends inside the trend. Now before this market push to the upside, this is what I have in mind. It's going to be like this, something like that. Okay, it's going to behave like that. So now before it does that, what concerns us is this area. Now I've drawn this trend line here. Up, there's a push to the downside. There's a push to the upside now from here. Now on the 15 minutes time frame, I will do a Fib retracement from this point to this point. And what I'm looking out for is that if I'm looking at the market to reverse around 3 key points: 0.382, this point here, or this point 0.50, this point here, or 0.618, this point here. 1, 2, 3. These 3 points are the point I'm looking at for. So now, because if you look at this thing very well, based on this Fib retracement, I've drawn it downwards. So the market actually, let me erase it. Let's take it in another dimension. Now it pushed to the upside, it pushed downwards. Now let's see, once it starts to it resumes in a new week, it's going to do two things, two major things. Either it's going to break through this level and retest this, or it's going to go up, sorry, we're looking for possible, this is a level. Okay, so we're expecting the market to do two things. I'm just trying to find the best explanation. Now, if the market is here already, it can either continue to the downside, or it's going to break through this level, because there's a reaction here, there's a structure here, a structure here, a structure here as well, and here. So because the market has tested this level multiple times, we have this structure here. So we're expecting the market to either push to the downside or break through this level, retest the level, and start pushing to the upside. So this is what we're going to be expecting in the two scenarios for this. So this is pretty much what we think is going to happen, because what we want to do is that we want to see how we can be on the right side of the market. So if it's a long, after breaking and retesting, we can just enter a buy to this level, to this next key level here, to this level here, and your stop loss could be just under the structure here. So that's what I'm looking at. That's for a buy. Then for a sell, could be just maybe just once it push to the downside, then once it gives me a clear bearish candlestick to the downside, then I can take a sell on that. So that is how we'll be looking at NZD USD. Now for GBP USD, I also have a setup already made. So what I expect is that pretty much just like the NZD USD, because they are correlated pairs, they behave similar. Now we don't know what's going to happen really, but I believe that if you look at it from the 4 hours time frame, the markets up, down, up, is trying to find its way up. We're expecting it to push to the upside. Push to the upside. So if it's going to push to the upside, let's go to 15 minutes time frame. Let's see what's going to happen around this area. Now, 15 minute time frame, you can see that yes. So if you draw your trend line, I drew this trend line as a result of the fact that this point and this point meets. Once 2 points meet in a trend line, that's fine. Then what I will be looking out for is points of where I have different ways of entry. I can use my free retracement to know where the market must pull back to. Once market is pushing down to the downside, the first way I can find how the market can move is that I'll take a free from this point to this point and see where the market can retrace. Okay, take a free from here to here, then look for retracement around here. Like what I mean is wait for the market to come up, like it has gone to this point, maybe retrace around these 3 points, 0.5, 0.5, 0.618 and 0.32. So around this area, you could retrace here and just push to the downside like this. Then I take a sell. Or it's more safer, because the analysis I'm using here is that I've made a lot of calculations here already. A lot of lines, trend lines, psychological levels that are making up all these lines you are seeing here. Now we have psychological levels of 1.2100. This is psychological level. These pink lines are psychological level. These horizontal lines are psychological levels. Okay, now psychological levels are levels where buyers can buy or sell, where the banks look out for. Now in this kind of technique, because this technique of trading is a multi-time frame technique of trading, meaning that if the high or the low of the week, this is the high of the week, this is the low of the week at the previous week, if it's going to meet at a certain point, then you take a trade there. Now this market, we don't know what's going to happen, But what I know is that from experience and from testing, I've seen that each time trend lines meet is always a key area to enter. So I'm expecting the market to come here, then I will know, and I will expect to also wait for a double bottom, either hitting here downwards or like this, like this. So but here is an important point. So I have to wait for the market to play out and let's see what's going to happen. Now for Euro USD, it's also a correlated pair as this ones as well, because they have the USD as a suffix. I already entered the trade here. This is actually I marked this one actually. I didn't enter it, but I marked it because I wanted to see what's going to happen. Now you can see that there's a sudden impulse to the upside. Now this sudden impulse to the upside ended here, and there was a pullback of the market. Now what I've done is to take a free from this point to this point, a free measurement from here to this point. I wanted to see where the market is going to reverse, and look at what the market is doing. It has reversed around this point. This point is very important, around what, between 0.618 and what, 0.786, between these 2 points. So that's where it reversed. So once it reverses, pushed to the upside. Once I draw a counter trend line against the direction of this reversal, then I should expect the market to push to the upside. So this is going to be I expect this market to be a beautiful buys. Then once it starts going up here, then I'll enter buys. Okay, this is a very beautiful trade I'm looking out for in the coming week. Now USD chef, I actually left it, so let's just leave it alone. Let's go over to gold before we finish with some indices. Now you can see gold. That gold gains strength to the upside. I took a test on the gold during the week. I didn't enter it, I just marked it, and look at what happened. Wonderful trade, wonderful trade here. I think I was busy around this time, so I looked at the market and I took a sell from here. Why? Because this multi-time frame analysis, like I always say, is that once you see a trend line and psychological levels meeting, and you have a weak rejection of the market meeting together in the same area, you can take a trade there. Now we have different confirmation. First of all, look at the trend line here, meeting with another trend line here, and also you have the market came here. You can see weak, builds up to this point. I saw weak for the buy signal, so it means it's going to be selling. Then I took a sell here, and it rolled down to this line, and you can see a beautiful. If I've entered here, you see it would have given you beautiful, wonderful profit. I didn't enter, I was busy doing other things. Now then the market came up here and it decided to react, decided to tank to the downside. Now I drew this box here, expecting the market to react to this box, and you can see what happened. It is giving me another good signal for an entry. You see, I expect to come here because why, the trend line meets together, and also this key level here as well. So although there wasn't wicks here, so I expect the market to still push to the downside. You know, I'll always look for very long wicks like this one. Is a very good point to enter. It's a good point to enter. Look at wicks here. Look at negative wicks here. It means there's going to be a reversal. And then yes, a very beautiful buy, but I didn't enter it. Look at it here again. This is a point of entry. So I use different ways to enter the market. I use my free measurements, I use my break and retest, or I use my multi time frame analysis, where I have trend lines and psychological levels, and weak rejection meeting at a point to take a buy. To be honest, it's much safer to use the multi-time frame analysis, where you have trend lines, psychological levels, and weak meeting together, and that's what I've been using to make to grow my account, and it's really worked for me. Now let's just go over to a few indices which we always look at, like the NAS 100. NAS 100, NAS 100 is a little bit clean here, so I've cleaned all some of the trend lines. This will happen in the week, in the previous week. Now then from here, 13th we saw the NAS 100 tanking to the downside because US dollar gains strength. So when US dollar gains strength, these indices usually push to the downside. You can see overrun trend pushing to the downside. It came down like this. It made an attempt to push to the upside. It came and started pushing down. So what it means is once you see indices pushing to the downside, US indices pushing to the downside, US indices, NAS 100, US 30, German 30, once they are pushing to the downside, having a bearish push, you know that US is gaining strength. They work inversely proportional to themselves. Now, what do we expect? We don't know what's going to happen, but let's see on the 4 hours time frame. Let's try and prepare this market and see what's going to happen. You can see first of all that the market has been showing a significant push to the downside. You can see from here all the way down here, push to the down. Let's take from here, push to the downside. It's been pushing, then push to the downside. Now, when you're looking for the how a trend is functioning, always try as much as possible to look at the top of every trend. What I mean is the top is, look at this area, look at this area, look at this area. See, top here, up, top here, up, top, bottom, top, bottom, because it's pushing to the downside. So what we have is that for this particular one, we have to find a way of structuring this area, so and seeing what direction the market will be looking headed to most likely. So what we do is to draw a structure. It has created a structure here. Okay, another structure here again, so market broke this structure, retested it, pushed to the downside. Now, two things we are going to be looking for. Now, it's the market breaks this structure, retest here, and push it, continue in downwards, meaning that USD is gaining more strength because it's getting weaker. NAS 100 will be going downwards while US will be going upwards, or we have that there's gonna be a rebound which has occurred here already. Then it's pushing to the upside, and that rebounds, if once you see a weak reject, once you see a clear once you see another bullish candlestick to the upside, you can take, like if you have a bullish candlestick to the upside like this, then you can take a buy from here, or you can allow the market to break, retest this level, and take a sell. Now for US 30, which is the last one, this is one of the last set of indices I've been looking at for now in this video, and the same thing happens here. You can see that NAS 100, US 30, and German 30 are all in the same direction, because they are all indices and they are correlated pairs. So what we'll do, like we did for US 30, draw a structure here, allow the market, wait for the market to do what it wants to do. It's either it reverses, or it breaks it. Either it breaks this one and retest it, then take a sell after it gives you a bearish candlestick to the downside here from this structure. You can take a sell to this next level here, or it can as well just bounce and start pushing to the upside, or you can take a buy after you see a clear bullish candlestick here. Then you take a buy from there up to this point. Now that is how it's going to be. Now for this video, I think I'm going to be ending here because it's quite getting long. Now German 30, always remember that the indices are working opposite direction of the US pair. Once the US pair is getting strength, then the indices will be going down. Now let's check the US index. You will see that the US index is going up. You see, the US index is going to the upside. It has retested this level and is pushing to the upside. Why? Because we have that the US has gained strength, but along the line it kind of pulled back, gained a little bit of weakness, then push to the upside. It's pushing to the upside again. So it has tested this point, this level. I don't know what's here. So you see there's something around this area. This area is very important. The market pushed to the upside and retested and pushed to the upside. Now this is where I'll be wrapping it up for this analysis. What I see for the week is that I think US dollar is going to gain more strength and pushing to the upside. So we're going to be expecting maybe the market to push to the upside for this US indices, DXY. So this DXY is just the US pair to all the major currencies of the world. So we're looking forward to a wonderful and bright week. Always please remember to trust the process. Try to be conscious. Don't force trades. Always ensure that you employ proper risk management so you can be on the right side of the market. Sometimes there's some weeks where there's some days where the market does not give you any movement. Just leave it alone. You must not trade every day. Just be calm and stay cool and calm and calculated. This is FX Mesh smashing it. If you like what I'm about, please like, subscribe, and share. Catch you in the next one. Peace out.